Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Now with Stifel Chicago, Lindsey Piegza joins us. Lindsey, how do you define recession? If it is an NBER, what's a Piegza recession look like?
Well, I think we're looking for 2 consecutive quarters of negative growth. But frankly, when we get to a non-accelerating economy with growth falling anywhere near less than 1%, you're kind of splitting hairs at that point.
Thank you.
The economy would clearly be struggling with inflation still very elevated at this point.
You nailed the elevation. How do you feel about economic growth? Can you even look out 3 months, 9 months, a year and a half, given everything hinged on policy?
Well, it is very difficult at this point. When we look at in hindsight, we see that the footing for the U.S. economy is still very solid. Consumer spending, businesses still investing, but there's an incredible amount of uncertainty and volatility coming down the pipeline, which could very easily shake away that solid footing that we've seen in the economy for quite some time now.
So, Lindsey, is stagflation a concern?
Actually, stagflation is the biggest concern. I don't think a recession or an outright decline is really my primary focus, but a period of stagflation as the Fed's lack of commitment to reining in price pressures could eventually choke off the upside potential for the U.S. economy, leaving us, again, we're splitting hairs, whether or not we fall into negative territory. The risk is that we see growth slow from this 2% pace to 1% to less than 1%, with nominal price pressures still up at 3-ish%. Slow growth, elevated prices, the very definition of stagflation.
So what are you seeing in the labor market here today, Lindsey? Because that's kind of the front lines for how people are feeling about the economy.
Well, the labor market is still somewhat solid, but showing signs of volatility and uncertainty. Now, most of the weakness that we have seen has been the result of tragic weather events, the fires in California, unfavorable weather scenarios in the Mid-Atlantic and the East Coast. But there was also a sizable decline in services hiring as of late, which could in part reflect the fact that the federal government has made moves to shrink the size of government, reduce federal employees, sever government contracts. And so this could be the tip of the iceberg in terms of that downward pressure on the labor market as a result of these new initiatives.
I mean, Lindsey Piegza with us with Stifel for a lengthy conversation here this morning. She was fabulous last year in gaming out a Fed that would stay higher on their rate because of inflation. As Paul mentioned, stagflation really front and center. What do you observe from the distance of the Midwest? I mean, when we say slowdown, and I totally take your point, Lindsey, on 1% is a recession for 2/3 of America, 3/4, whatever. But is it a good slowdown or a service sector slowdown?
It would be a service sector slowdown, which has really been the engine of the economy at this point. So I do think that if we saw that precipitous decline in activity, broad-based activity, it would primarily be a reflection of that pullback in services, both on the hiring side, but also the expenditure side. And we've already seen consumers exhibit this rising level of concern amid a very uncertain outlook, pulling back on what they're purchasing over the course of the past 2 months. So really setting us up for a potential self-inflicted, if you will, downturn in terms of consumer activity being sidelined as a result of this tremendous amount of uncertainty coming from fiscal policy.
So, Lindsey, have you guys changed your GDP forecast here recently?
We haven't necessarily changed our forecast, but we have added to the downside risks to our forecast. It's still too soon to say exactly what the impact is going to be of the latest initiatives from the Trump administration. But I do think that the downside risk to growth, the upside risk to inflation, we're starting to see that spread increase, which could compound a less favorable outlook for the economy, at least in the near term.
How does the stock market fit in? If you look at, any core, like first term economics major, non-economics major text, the stock market, Lindsey Piegza, shows up about chapter 23. How do you fold a declining stock market? Futures now negative 80, Dow futures negative 481, the VIX out almost three big figures. How does that fold into confidence in the animal spirit?
Well, I think that reinforces the concern and the lack of optimism that the market has right now for the U.S. economy broadly. To continue to perform without this ongoing strength propelled by the consumer, which again really propped up the economy over the past couple of years. So this underscores the uncertainty and the volatility and the lack of confidence that investors and consumers have looking forward over the next couple of quarters.
All right, so Lindsey, where do you think we'll see some of this, I guess, just uncertainty in the marketplace caused in part by some of this talk on tariffs, talks on change of immigration policy? Will it be in growth, GDP numbers, or will it be in inflation? Where do you think we'll see it first, if at all?
Well, it's going to take some time to filter into the inflation numbers. So the tariffs that are enacted today are going to take probably 2 to 3 months to filter into the inflation numbers. So there is a sizable lag. In terms of the growth aspects, we would expect that more of a near-term reaction, consumers reacting in anticipation of those potential increases. We would also see businesses at the start of the year already increasing inventories, again, in anticipation of that potential implementation and potential impact of tariffs. So I think we're going to see that in the growth numbers first and foremost before we actually see the realized impact on prices.
Lindsey, Northwestern University in Chicago, they have their acclaimed transportation center. Right now, the transportation center between whoever wins a Canadian election and President Trump is a bridge between Detroit and Windsor, Ontario. You've got a visceral knowledge of that. How do you describe to mere mortals the trade tension across that frozen river?
Oh, it's quite intense. But remember, it was not long after that tariff was announced that the Trump administration did grant an exemption for the auto sector for a period of 1 month amid massive pleas from several large automakers that these tariffs would cause severe supply chain disruptions, could result in significant price increases. So the sense of immediacy in terms of that rollback, that exemption period, really underscores the sensitivity and importance of that relationship on both sides.
We get to April. I mean, the Red Sox are winning the first week of April. Season's over by fourth week of April. Lindsey Piegza, are we going to see, do you just assume with the dynamics and knowledge and facts you have right now that, Ford or GM or Stellantis Chrysler's going to dial 1-800-TRUMP and say we're laying off X thousands of people on Tuesday? Is that what we're going to see in May or June?
Well, we certainly could be, and it could be used as a negotiating tactic. But at the same time, the Trump administration has been clear that a period of adjustment is expected, that temporary disruptions are expected. And the bottom line comes down to the Trump administration wants to be able to level the playing field. And if that comes at the consequence of the auto sector, I think the administration may be willing to sacrifice that, at least in the near term, to ensure a better, longer-term trade agreement with our neighbors to the north.
I'm making the number up, folks. I'm not qualified. They're going to sacrifice 20,000 jobs in the greater Piegza Midwest to get some national thing done. I see no history that's occurred.
I don't think that we have to go to the extreme where we see a complete shutdown of the industry, but maybe there's some room for negotiation. The tariffs that were put in place, the 25%, maybe that's too elevated for the auto sector. Maybe we see some sort of exclusion, as we saw with Canadian energy, which will have a lower tariff of 10%. Maybe the Trump administration would be willing to negotiate lower. But again, it comes down to the resolve of the administration to enforce these tariffs to ensure a longer term, more even playing field with our international trading partners. And I think if some jobs are lost, if some uncomfortability for the economy occurs, I think the administration is willing to take that medicine.
Can I editorialize?
Yeah, go for it.
My head hurts.
Yes, exactly. Hey, Lindsey, given all this backdrop here that we've been talking about, how's the U.S. consumer these days?
Well, the U.S. consumer is on relatively solid footing if we look at their financial condition. When we look at the amount of debt accumulation, yes, it has ramped up massively, particularly with credit cards at $1.2 trillion in terms of outstanding balances. But when we put that in the perspective of the health of the balance sheet, so the ratio of debt payments relative to disposable income, we're still talking about a multi-decade low. So the ability for the consumer to continue to spend and borrow is certainly there, but the willingness is beginning to get chipped away, again, amid all of this uncertainty of these different policies coming down the pipeline.
Dr. Piegza, thank you so much. My Economist of the Year last year, she absolutely nailed a Fed reticent to cut interest rates.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Henrietta Treyz with us right now. She's been with us almost daily, wicked intelligent with Veda Partners on what's going on in Washington. Henrietta, I got 8 ways to go. And folks, I'm not going to mince words. The tape is terrible this morning. Jeff Stein, Dan Diamond, the Washington Post, top story. Everybody in Washington reads it. Trump touted sweeping tariff DOGE plans, then watered down. How long can the White House sustain action and then watered down?
Apparently in perpetuity. It's happened effectively since January 20th when he, front ran his trade team in the Oval Office that night, said tariffs were coming February 1st. Immediately pushed that out to February 4th, kicked it to March, kicked it to later in March, and now here we are on the cusp of the week where we're going to get steel and aluminum tariffs, both at 25%, tariffs on dairy and lumber coming in from Canada, which are going to be massively disruptive and get huge pushback from the home builder industry. I think there's going to be a continued, probably 4-year-long fits and starts on the trade front.
4-year long.
Oh, great.
She's depressing.
Yeah, she is.
I need some tang.
So, I mean, Henrietta, should we expect any type of discussion, rhetoric, commentary from our good friends in Congress about global trade?
Yeah, I think that's going to tick up. One of the things that's really noticeable to me in this Republican bill, you were talking about the prospects for a shutdown earlier, there's no bailout for farmers in this package. And if this bill passes, that effectively means there won't be any further subsidization of the U.S. agriculture industry until late September. That's a really long time to weather what is about to be a 15% tariff from China on all of our agriculture sector, and then tariffs on $86 billion worth of goods, mostly pork and beef, fruits and vegetables, orange juice, things like that from Canada as soon as March 25th. So there's a big headwind coming the agriculture sector's way, and that's going to start to spur members to start talking back.
What is the response of Henrietta Treyz's Washington to economic slowdown, sort of kind of like recession, or actual National Bureau of Economic Research recession?
Man, this was incredible data sets from President Trump over the weekend, effectively acknowledging that the $5 trillion in tax preferences that the Republican Party is writing right now, will not be stimulative, will not be enough to offset the potentiality of a recession driven by global tariffs for the first time since the 1930s. So I think that was a real showing of President Trump's hands and the cards that he's hearing from his economic advisors behind the scenes. The problem is that Ambassador Lighthizer and his current trade and commerce secretaries and treasury secretaries support the tariff agenda, support this whole idea that tariffs are the way to get everything that we want. So I think that's really striking, and everybody should sit with that for a little while.
And, over the weekend, Henrietta, I was thinking about just the political calculus associated with tariffs. If I'm in Des Moines, Iowa, okay, maybe I'm not a farmer, and there's maybe, a handful of big farming conglomerates in Des Moines, Iowa. But everybody in Des Moines, Iowa, in some way, shape, or form is kind of impacted by the health of the farms in Des Moines, Iowa. How is this politically doable for President Trump and his administration? I would think it would be very difficult for them.
You know what's interesting? I feel like it's doable for Trump and the administration because he personally is so popular. Who it's not doable for is the House and Senate Republicans. So I would take Alaska as a perfect example. You have states like Alaska that are heavily federally subsidized, whose veterans are being fired. 331 veterans just in Alaska alone already from DOGE before they even get to this big sweep of 80,000 veterans they're planning to fire and the big sweep of federal employees they're planning to fire over the summer. You have these individual senators and individual House members in swing districts or those votes that have gone back and forth. And those members are already illustrating that they can't weather the storm. They've canceled town halls. Democrats are sort of gleefully pointing that out and holding their own so that those disaffected voters come and speak. I don't think that it's a problem for Trump. I think it's a problem for the rest of the Republican conference. And that means they have a year to get their legislation enacted, and then they'll get shellacked in the midterms, which is normal.
Henrietta, quickly here, the Washington Post talks about firefighter training at FEMA canceled. Bloomberg's got stories of this, that, and the other canceled. This in Forbes, aviation safety at risk among DOGE cuts. Is that true? Do you perceive that the cuts are drifting into airplanes landing at Denver?
That is absolutely true. It's definitely the FAA. I mean, they're cutting everything from that to the Weather Service. So yes, it's across the board, indiscriminate, completely ad hoc, and inconsistent. And then even adding to the uncertainty, there's reporting out this morning saying, hey, give us your personal email address and your personal cell phone address so we can call you if we mistakenly fired you. So I think there's just a lot of disruption. The jobs reports numbers are going to be a real up and down for the next couple months.
I got that email from Bloomberg this weekend. Henrietta Treyz, thank you so much. Our most valuable guest, most valuable player award.
Yes.
For early 2025.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Oh, Canada. Derek DeCluet joins us now, executive editor, managing editor, Bloomberg News in Toronto here on the path forward. Okay, Derek, the Democrats, the Liberals won. It's Mark Carney, ex-governor, financial, monetary guy, England, Canada. The Conservatives are there. If there's an election, who's ahead in the polls?
Well, currently the Conservatives still have a lead, but it has narrowed a lot. When Trudeau was kind of on his way out, very unpopular prime minister at the end of last year, the Conservatives led in most polls by more than 20 points. And now if you look at the polling that takes into account, this is prior to yesterday's vote that made Carney the Liberal leader, but where pollsters were asking, theoretically, who would you vote for if Carney was in the race? Conservatives have kind of a narrow lead. About 33% of decided voters, and the Liberals would, under Carney, have about 28% of voters. So it's going to be tight, and there's going to be probably an election campaign coming soon.
I can just see us up in Ottawa or Toronto, and now we go to the key state, the swing state, whatever. What's the Ohio of Canada? Like Carney excuse me, I don't know how to pronounce it because I'm an ugly American. Who's the conservative candidate again, Derek?
Pierre Poilievre.
Poilievre and Carney, where's their Ohio? Where's the swing state among the provinces?
I mean, this gets decided really in the suburbs of Toronto, the suburbs of Montreal, and the suburbs of Vancouver. The Conservatives have more or less a lock on most of rural Canada and much of the West. The Liberals, historically, and certainly under Justin Trudeau, were extremely strong in the core centers like downtown Toronto and certainly large parts of Quebec. So this is the way to think about this is more like it's the suburbs of Philadelphia. That's the Ohio of Canada.
Bucks County. Don Mills is the Bucks County of Ohio.
That's right.
Derek, what's the feeling amongst the average Canadian about what's happening here in the U.S. and how we're kind of interacting with you guys in terms of tariffs and rhetoric and out of this administration?
The first word that comes to mind is anger, and I mean that. It's outright anger. There was a poll last week that was published asking Canadians how they view the United States, whether it's an ally country, an enemy country, or a neutral. For the first time, I think, ever, ally and enemy are equal. 30% of Canadians believe the U.S. is an ally, 30% say enemy, and most of the rest say neutral. And that is, I think a year ago, those numbers would not have looked anything like that. That is entirely because of the trade war and the 51st state taunts and Justin Trudeau. I mean, every poll that you see shows just a huge level of opposition to anything like a 51st state idea. It's in the 80 to 90% range. It's similar across the country. There is no political appetite up here for discussion about any type of union with the U.S.
Good morning on your commute across Canada and America. Derek Clouet with us right now from Bloomberg News in Toronto. Paul?
Derek, what do we expect to hear from Mr. Carney here in the coming days and weeks and months of his, going forward?
It's going to be a really fast transition from Trudeau to Carney. The two men will meet today. We expect Carney will be sworn in probably by the end of the week, and that he's really going to try to drag the Liberals from the left much more to the center to be a more business-friendly face, more focused on growth, and that he sees as sort of his pathway because he won the race because he's seen as the economic guy, and we're if not in an economic crisis, then on the precipice of one.
What is the nature of the election? I mean, you've got tenure at the Globe and Mail, which I read pretty much every day. Good morning to David Shribman, writing for the Globe and Mail and the Boston Globe as well. Derek, how does the election differ from in America? Like, does Celine Dion show up the Wednesday before the election? I mean, how does it work?
It's an extremely quick election.
Yes.
When we get into a general election, it'll be about six weeks long. Uses the British parliamentary system, and you can have, as Justin Trudeau had for most of his time, a sort of semi-coalition government where you have to pull together multiple parties if one party does not get 50% of the seats in the House. So it'll be quick, and I think this one will be quite personal and nasty because there is a lot of animus built up between Pierre Poilievre and the Liberal side.
Michael Barr wants to know, do they campaign by like saying, if I'm elected, I'll save the Toronto Maple Leafs? I mean, how does Derek, can Carney or the other guy say, I'm going to fix the Toronto Maple Leafs? Or is that the unfixable?
Mark Carney is a huge Edmonton Oilers fan, so I don't think he has any interest in saving the Toronto Maple Leafs.
Are there any Liberals in Edmonton?
Actually, Edmonton's the most liberal part of Alberta by far. They do have one seat out there.
Do they trot out, like, does Bobby Orr get trotted out? I mean, I saw the Gretzky uproar with Canada and the series and that, but what should we look for in the election? Kissing babies at hockey games, or is there a different approach?
Well, there will be some of that, but Canadian politics is a more understated affair, compared with U.S. politics. I mean, what you will see is the candidates just over and over, just like they were over and over again in the seven swing states. They will be over and over again in Mississauga, Ontario, and the suburbs north of Montreal, and in Richmond, British Columbia. Because most of the 340 or so House seats are kind of already decided. It's going to come down to probably 60 or 70 swing seats. But Canadian politics is also volatile. Stuff can move really quickly.
I got 20 seconds, Derek. Sparta wants to know if he does a road trip sending Lisa, Michael Barr, Paul Sweeney, and me to Canada, should we go to Toronto or Ottawa to do our show up there?
You should 100% come to Toronto, and we'd love to have you.
There you
See
go.
that?
See?
It's like done.
Canadians we love Canada.
It's
Why?
amazing. And then we didn't even ask him what Looney's going to do. Derek, thank you so much. Derek DeClua with just huge
Tom,
journalism
I don't know
experience in
one
Canada.
person in my life that has anything ever negative to say about Canada.
No.
We love Canada.
Michael
Where did
Barr and
this
I were
come from?
talking.
It's
I'm not
just-
on speaking terms with
to
Lisa,
have
but I am
Canada
with Barr.
view us, a
You know.
big portion of Canada viewing us as enemy. It's just so disappointing.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Right now, Kristen Bitterly with us with Citigroup out of Notre Dame, just exquisite academics out of Notre Dame, and we're thrilled she could join us this morning. We have a tax-aware investment up 20% 2 years in a row. Now we have all this emotion as well. Are you taking profits? I mean, that's in the old days what we used to do. Now we have wealth management. What are you doing about the tax situation if everybody's got ginormous gains on their portfolio?
Well, I think the really interesting thing for U.S. investors is that there's plenty of strategies that are tax aware where you can actually do that rebalancing without necessarily having to take the gain.
How do you do that?
So basically what you can do is generate passive losses within portfolios such that if you want to rebalance, you're not actually penalized for rebalancing and then following the benchmark index. And there's even more innovative strategies because in a bull market, it's going to be difficult to actually continue to generate those losses unless you're adding capital every single month. And so what some of the more innovative strategies are doing are using futures and options to be able to do that as well. But that being said, Tom, I think your question is more around looking at the market that we're in and actually saying, where should you have exposure? And that is something we did some substantial rebalancing in Q4 of last year when we were just looking at, we couldn't have predicted DeepSeek or anything like that, but we were just looking at the outsized representation of the Mag 7 and saying we see earnings broadening out this year. So let's be a little bit more balanced in terms of our equity exposure. And we also diversified internationally. So if you are someone who came into this year where you have fixed income exposure, you have international exposure, you weren't overly exposed to those mega cap names, well, you're not happy right now seeing some of the uncertainty and volatility, you're pretty well positioned in terms of being able to weather this storm.
What are you hearing from your clients just in the last several weeks with this sell-off in the markets? We're off in the S&P 500, 7-8% from the recent highs. What are you hearing from your clients? Is there a level of concern, panic? What are you hearing?
Well, when you look at how the market is reacting, I think very simply, it's been a pretty orderly sell-off. You can even see that in levels of the VIX. I think our investors in wealth management, we are lucky because they're long-term capital. And so they're really playing the long game here. But I think the big question on the table right now is we started this year from a position of strength. You could talk about the broadening out story in U.S. equity earnings. You could talk about the $6.5 trillion in cash on the sidelines, inflation coming down, even the fact that Fed funds have peaked. And now the question is looking at this economic data that's coming in, particularly when it comes to sentiment, consumer confidence, as well as the employment backdrop. People are wondering, all of these details, are they telling us a different economic story?
48 seconds before we go to the market opening. What does buy the dip mean to Kristen Bitterly?
I think buy the dip means we have not yet capitulated. However, there are opportunities, especially right now, large cap, quality, free cash flow generating names. If I'm buying the dip and actually not just picking a moment from market timing, but going on the way down, I would lean into quality, free cash flow.
So there you go, quality free cash flow. I mean,
are you allowed to give us a name, or do you go in the timeout chair if you do that?
Well, I mean, single stocks, unfortunately, I would go into the timeout chair, Tom. But what I will say from a sector perspective is you can look at some of just go from a size perspective, large cap, profitable, free cash flow. Even some of the dividend grower type names would be beneficial as well.
Kristen Bitterly with us here on managing emotions. Is cash a constructive holding right now?
I think it's part of a portfolio in terms of maintaining liquidity and being able to buy into some of these opportunities. I think the thing that you always run into, going back to this concept of market timing, is for investors who believe they're either all in or all out. That is not productive.
Come on, she's killing me. You're at Notre Dame. You're killing it. Show me 1 minute in economics at Notre Dame where, quote, market timing, unquote, worked.
It never worked, market timing. That's the thing is, if the stats are actually, on average, if you miss the 2 best days in a given calendar year, you erode your per annum gains by nearly 80%. And so the reason for that is you tend to have clustered volatility in the market, where essentially the sell-offs are followed by some of the best days. And so what we tend to see is, if in this type of environment, if you're very nervous, if you go all out and you're in cash, yes, there's some attractive yields there, but those are temporary. Your long-term earnings are certainly going to suffer.
Shout out, Ryan Detrick today out on Twitter had a great tweet on this, Paul Sweeney, about the X number of days.
Yeah, boy.
Single days, like the days Duke loses in basketball.
Rare.
The single days, if you're not in the market when it moves, Miss Bitterly's number is 80% of your gain evaporates.
Absolutely, we've heard that before. So we've seen a lot of policy-driven uncertainty in the marketplace over the last couple of months. Are you suggesting to your clients look past that and focus on the long term? Because boy, you can make short-term recession calls, you can make inflation calls, stagflation. There's a lot of concern short term, but do you make the call to look past it?
So what I would say is the number one concern that our investors, and the number one question that they really have, is I think coming into this year, there was comfort in terms of when President Trump won the election, there was this overarching concept of pro-market.
Yep,
the S&P 500 is a barometer for success, and the 10-year below 5%. I think some of the most recent commentary, where taking a victory lap because yields have come down and what that means for mortgages and other parts of the market, are causing people to question a little bit. But going back to what I said earlier, asset allocation has worked in these markets. That actually is something healthy, and it's something that we haven't really seen over the past couple of years. So correlation, fixed income equity, the lack of correlation there is actually working in your favor. So diversification, asset allocation are where to be.
Do you own a Tesla, like a car?
Do I actually own a Tesla myself? No, I do not.
Thank God.
I do not.
It's painful. Mrs. Keene was on the phone with somebody that owns a Tesla. Wow.
Yeah.
It's like depreciation city. Tesla down 14. It was like a 253 indication. I didn't even mention it. 248 on Tesla.
5.5%.
Right now.
Yep.
Is it 5.5%?
Yeah, 5.5% today.
I still don't know how to do that.
Year-to-date. BQ, baby. BQ function. Bloomberg quote.
50%.
Yeah.
It's working out.
But even if you look at that, the rally post the election was so extreme, so that volatility to the upside, you're going to have some of it to the downside as well.
We're back to September.
Exactly.
That's how I look. We're back to September 2024. Notre Dame March Madness, come on.
No, please.
Oh, I know. I was just at Notre Dame last week. I was. Our women are faring better than our men.
There we go.
Yes.
And there's always football season.
Kristen, there is, and they're better than good. Kristen Bitterly, thank you so much. She is with Citigroup.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We need some joy. The newspapers, Lisa Mateo. Lisa, make us laugh.
Well, see, now I'm going to make you not laugh because it's not such an upbeat story. Okay, it's a look into the job market. It's just showing how more older Americans are turning now to blue-collar jobs and side hustles because they're getting squeezed out of the white-collar jobs. They're saying their age, salary expectations, they're being beat out, by younger workers. So they're going into truck driving, custodians. Some are taking part work as security guards, Uber Eats on the side, because a lot of them actually still have debt from getting their masters. So they still have to pay off a lot of
people are living
debt.
longer. I think this whole retiring at, somebody might do it at 61. For example, somebody might try to retire at 61.
Yeah,
no,
they
not
can't.
happen.
They can't.
Just
because you have to save up more and look at how much you have left. And
now
they're getting laid off earlier.
I was sitting in Prague, the Czech Republic, having a lovely, moonlit dinner all by myself, out in a little cafe, and everyone around me was older and American. This has got to be pushing 25 years ago when Matt Winkler sent me over there. And the answer is, I predict thousands of retirees in America will go abroad. tip of the iceberg here right now.
Yeah.
It's just brutal. And I make no bones about it, folks. I can't afford to retire. Like, fossils like me are like, you're kidding me. Mr. Bloomberg, good morning. How are you, sir?
Exactly.
It's like that. Next.
Have you ever had beef bourguignon?
Yes.
Did I say it right?
I've made it.
You've
Came
made
close.
it.
There's a
Really?
little place on Rue Dauphine right by Hotel d'Aubusson that makes the best beef bourguignon.
I'll take your word
And
for it.
they use Costco utensils. It's like cheap. It's the Rooster. It's called.
It's a rooster, but you brought but that's the point, because it's cheap. Okay, so there's this restaurant in Paris. It's called, stick with me here, Le Bouillon Charter.
Oh, I'm going with that.
In Paris, it's been this destination for like cheap French food since like 1896.
Oh,
it was on the Netflix show Emily in Paris, so it became popular again. But theirs is in American dollars, $10.80, and they've kept it that way for 4 years because they want to make it more affordable to people. But they're saying it's harder for them to keep that price because everything is getting expensive. The electricity for their restaurant, the wages for the staff, the price of the beef. So what they're doing instead is when prices soar too much, they'll drop certain items from the menu, like the beef, bourguignon, or however you say it is. Sometimes they'll take it off for like a week and then they'll bring it back, because if it gets too expensive. But I need to try this.
I know.
It sounds delicious.
I haven't been to Paris in a long time. I need to get over there. I got it. But where's the euro now? 108. I missed my shot at 103, 102 on the euro. Yeah.
Next.
And finally, Tom, I think I'm going to have to go for the super big cart at Costco because usually I keep mine to like a one cart. Maybe I'll grab another.
But you lie. I've seen you with 2 carts.
But they have the big trolleys, and I think I have to go for it because they're massive 100-inch TVs. They're a huge hit. 100-inch. Do you need a TV that big? I don't know. But they're about $1,500 to about $3,500. That's the range for them.
And they're selling like hotcakes.
And they're selling like crazy. People are buying them up, one, because social media made them popular and people started unboxing these because the box is like ungodly. Like it's huge. And so people started posting this. But they're saying, what's interesting is that the shift in Costco, like the people who come through the store are now wealthier. So they're putting in a lot more of these higher end products into Costco now, like a $400,000 diamond ring.
They got TVs everywhere at the ShopRite on Route 35 in Wall Township. They have those big, massive TVs just sitting there by the checkout. Oh, yeah, I'll take that.
I don't get it.
Yeah.
Crazy.
It's fascinating. Lisa Mateo, thank you so much. The newspapers this morning.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.